Good evening, all. Ira Epstein, and here we are with your Spider stock market wrap-up. And this wrap-up is for Thursday evening, the 22nd of June, 2023. So this was a strange week. We come back from a holiday, so you always get the weird Tuesday, and then we get a lot of economic data, but 2 days of Fed testimony. And today was also a day where bank upon bank came out with their decisions on monetary policy. Bank of England up 50 basis points. Switzerland raised its rates. Norway raised its rate. Mexico got inflation dropping, so they went into a pause mode, and they might stay there as long as it keeps falling. We hope that that would be the case in America. We'll see if that turns out to be. But who will show up tomorrow is probably the naysayers, because once you get past the Fed and some of these numbers, they go, okay, what's hurting us? And they seem to want to come out on each one of these pullbacks in the market and try to buy it. We lost a series of embedded readings in the S&P, the NASDAQ, the Dow, and the Russell. Other than the Russell, which hit its downside target after doing that, you're very close in all the others, and that's why I say you might see these naysayers show up. In Rivian, again, they had big announcements this week, big ones. They're going to come out with their new SUV to take on the Model 3 Tesla, $40,000 to $60,000 car. They're going ahead with their charging units and still joining the Tesla network for that. Going to give you adapters. And they bought a software company that they're going to be able to put some direction guidance and things in their car. Yet stock not able to hold the rally. Are we trending? We are not. You can see how it's moving. Now, what I'll probably do this coming week, I'll finish up over the weekend for you with the weekly charts, and I might do Fisker next, just to get us into the rotation and see how these are doing. If it continues to drop, I'd look for huge support down at 1360, the lower Bollinger Band, and momentum. Well, you've got momentum pointing down, no trend, and maybe you can reach down there. Now, in Schwab, as I told you, I thought you might make, and this was just yesterday, I said I wouldn't be surprised if you make a run to try to get to the lower Bollinger Band. It didn't do it. You hit 52.75. My target is 52.61. You were down 76 cents today. You're pretty close, and now you're starting to get oversold. This gave ground, KVE, KRE, they all gave ground because interest rates are going to stay high. The Fed was pressed over and over today by the Senate Banking Committee about bank regulations, but the regional banks seem to be not in the scope of seeing capital increases. Yet, you've got to wonder if rates stay this high and longer, all of these companies, Schwab included, that profit center gets eroded. Not gone, it gets eroded. They got to pay up to compete with other brokerage companies, paying higher rates if they want to attract their clients. They got to pay up if they don't want the money to move into a money market account where they don't earn anything. So there's different things that happen. In the gasoline fund, well, this is the zone right now where the support starts to show. It's between here, 60.70 to 59.46, but it's overbought and correcting now. I'm not a keen fan on buying markets that are overbought. Any reading that are over 70 and not embedded, not interested. And this market doesn't like to stay embedded. It flirts with it and quickly gives it up. Back here was the only good period where it did it, and I'm talking March to April. You had that one run up. Then it was met by an equally bearish period, as you could see. Right now, it's just the middle of no man's land. Now, the financial services got hit, and I was looking for them to fail, as you know in these videos, on the rally into the 100-day, the 200, and the Bollinger Band, literally right here. Yes, you had 2 days where you went over it a bit, but now you're right back to where I thought it was going, the 18-day average. Any close now, and it's got it under 32.90, puts the bears in control, which they are going home, unless you get back over 33.30. That negates the downtrend. Barring that, you've opened the door for 31.84 if it wants to add legs to the downside. In XLI, the industrial sector, this rally surprised the heck out of me. I just don't see industry. Every friend I have that runs companies, works for companies, it's not a good time. I think this was part of that buying mania where everything went up off the AI. Now the market has lost the embedded reading. My work says that unless it's regained tomorrow, tomorrow. You heard what I said. Putting both numbers back over 80. Before you get to 106.60, the odds favor you're going to go wherever that 18-day average is. NVIDIA is still the powerhouse. I see brokerage firm upon brokerage firm coming out and going, you've got to own NVIDIA. So what this market is really doing is I drew these lines just for you. You can see that's not a moving average. I had just drawn a number where I thought that you would find once you got over it, that would be the fighting number. It is. And it's still bullish until the red line closes under 79. When that happens, you'll go to the 18-day average. Barring that, as long as it's like that, the pros are buying, and they'll look still for higher prices into the 444 area. I made a mistake this last week buying stocks. I thought that would be a good play too. And when I say buying, recommending to my clients to buy it, minor loss in it. But I learned my lesson. In futures, you buy the strength, not the weakness. Let's assume that all the strength is being seen in August gold. You don't start buying December gold. It could be a whole different slew of things going back there. Well, that's like not buying NVIDIA, which I would have never been in trouble with, and buying stocks instead. I thought that, if you will, the mixture of all the companies would do better. It did not. This is not a trending market. Home builders I still like very much. How could you not? They're all going to get orders. People are buying. The starts, the permits are exploding. So I think the pros are buying it here. I think they'll bail, saying, okay, this was a distribution area. It didn't work if you close under 79. And if it goes up, I think they're looking for partial profits at 79.50. Energy's in a bearish phase. Still have momentum down, trend down, bias down. You might be heading now for 76.61. It is most certainly on my work not a buy. GLD, gold has got its problem. All these banks raising interest rates is a headwind to gold in any currency. And that becomes the problem. Number two, everybody's trying to beat down inflation. So if gold's going to rally and you can beat the inflation story and have high rates, gold's got a problem. It's got a big headwind. And you've seen the shift in the gold over that. That, I think, I'm nailing for you what I think is the issue now facing it. And I don't expect gold going back to these highs for a very long time, if at all, anytime soon. In SLV, it is the same problem with industry. I mean, that's really what this is about. It's an industrial metal. It's not a precious metal. I mean, Tiffany sells this stuff at crazy prices, as we both know. But at the end of the day, silver is a $22 an ounce metal. It's not $1,800, $1,900 an ounce. Yet they treat it like that. And you can see how it keeps coming down. It needs more demand out of China, the U.S., other countries that right now, that's not going to be easy to come by, and that weighs on these markets. Now, copper's living and breathing. Is China going to do anything? They did things in terms of lowering by 10 basis points, all kinds of interest rates. This week, they have also offered to electric vehicles another incentive, but it's not enough. It's not big enough yet. So the market's hanging here. It doesn't want to be short if they pull something out of their hat because the economy has slowed down. Yet the technical work is saying, no, you don't want to be long. That this is a problem area for it. When you lose the embedded reading, you go to the first major moving average. If we backtrack on this together just a little bit here. Here you're embedded. Next day you lose it, but you closed over the 100-day average. All that's the goal is the 100-day average, and you pull right back to it. Do you understand what I'm saying? So I don't know what to do with that type of chart. In BND, no trend. You got a higher high, lower low. The market's caught with one day going, oh yeah, I can see that the Fed is not going up on those long-term rates. Then you look over at the 10-year yield, and you get more convinced of that because you see that the inversion's out to 100 again. But then the market's on the whole thing is still pricing slightly higher rates, and that's got the market into what I'll call a funk. Unfortunately, they have a bad quote that came through tonight, not during the day, so can't give you the chart there. I can talk FXC, though. The market has what I call that gorilla glue trade. You're riding it. I think that if you can embed the reading, we have how many days? 1 day of both numbers over 80, 2 days, yesterday, and day 3 was there. So I think that the market is waiting for a break now, that the pros will buy on a break. They'll bail if you lose under a 79 reading. That's what I expect to occur. I wish I knew it would occur, but that's what I would expect. And they'll try to get back up to these highs. There's a way to do that on slow stochastics, which, as you can see, we're talking between that and the Bollinger Band over and over. I have a course that teaches it called Enhanced Bollinger Bands. It is a mixture of this with that. It's 15 chapters. You learn how I do it. You go and apply it, and we give you the charting and everything, and I think you go, whoa, that's pretty interesting with it. That's exciting. So you put it all together. That's the game. And you can learn that course by either clicking here. It'll take you right to it. You can go to our website at iraepstein.com, or let me introduce this fella who can tell you more about it. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.